Good afternoon, everybody. Happy Monday to some, I guess. I'm sure not everybody had the best Monday with some crazy moves in the market today. So what we're going to do is we're going to go over, some things that you could have looked at towards the middle to end of the week that may have kind of pointed to possibly a little bit of a pullback in the market. So earlier last week, we did this show. Things were looking pretty good. Now, the one thing that I want to point out, anytime you're doing charts, technical analysis, you have to look at price action. So you always have to look at what's the upside, what's the downside, and go from there. There's never any guarantees. So, on Monday, things were looking pretty strong. IWM was having a little trouble, but all in all, things were looking relatively decent into the middle of the week. And then a couple things started to pop up on my radar that looked a little iffy. So what I want to do is go over what some of those things were. So one thing I'll mention, I don't use oscillators a lot. I don't use the Williams percent range and the RSI a ton, but when I do, it is when the market seems like it's getting a little overextended, things are starting to kind of top out. And that's exactly what I started to look at last week around Wednesday when things just started to look a little toppy. So I will turn on the Williams percent R10 as well as the RSI 10. And so these are two oscillators that really just measure momentum in the market, and they're really a function of highs and lows in the market. So as these started to both show some negative divergence, that's when things definitely started to get a little iffy. This is a setup that I look for a lot, either when the market's at its highs or at its lows. So I look for divergence on the downside as well, just like this. Instead of lower highs like we can see here on the RSI and the percent range, I look for higher lows. But in this case, we were hitting higher highs on the price, and then we were hitting these lower highs here on the RSI 10. And the reason I'm using 10 is just that's 10 trading days, 2 weeks. There's 5 days in a trading week times 2. So that's where you get your 10. So I'm essentially looking at the 2-week RSI, and then I'm looking at the 2-week Williams percent range. And so one thing that was interesting is both of these started to hit these lower highs. Just in general, the market was having some weird moves. The market was really moving up based on a couple names. So Apple, Microsoft, Google, some of these bigger names that have quite a bit of influence on the indices. And so the indices looked, a lot better than what was going on under the surface. So that was the first red flag. And then on top of that, we started to see these divergent highs and with price, and it just started to get a little iffy there. So all in all, that was the red flag. And then from there, we did start to move down pretty quickly over the last couple days. And so this morning, just a huge gap down. We actually continued down, got a little bit of a bounce here. So one thing I'll do is I'll make my screen a little more zoomed in. And you'll see here, if we take away the Williams percent range and the RSI, we had a pretty decent bounce into the close, but all in all, today was kind of crazy. Some names were pretty green, while some of these larger cap names and the indices in general were pretty red until kind of the end of the day. We have this nice hammer that's forming, and you'll see here I'm using what's called the anchored VWAP. So it's created by Brian Shannon, founder of Alpha Trends, and so what it is we're just looking at the volume weighted average price from these different points. So one thing that Brian uses is what he calls the anchored VWAP handoff. And so that is when you have an original point. So here's our original pivot here on March 4th. That was the lows for SPY. And you'll see I have an anchored VWAP here from this pivot. And then from there, you'll see here that I have another anchored VWAP from this candle that was the last candle to touch the anchored VWAP, this original anchored VWAP. So that's your handoff. So that's where the term handoff comes from, because you're essentially handing off another anchored VWAP from this point, and then you'll see how the price kind of bounces right around this area in mid-May, and then you want to anchor another VWAP from this candle that last tested the handoff VWAP, and you'll see here that we literally bounced, pretty solid off this area. So you can see we bounced off of it in early June. We did undercut it in mid-June and then continued up, and then we bounced off of it again today. So the question is, do we continue down? Is this gap above going to fill quickly? We'll just have to see. But all in all, this is something I also mentioned last week. We have some divergence not only on the daily chart, but you can see here on the weekly chart, we also have that same type of divergence. So in this case, I'm going to use the RSI 8 because I want to look back essentially 2 months. So 8 weeks would be 2 months of data. And so you can also see this, this divergence is starting to play out on the longer term chart as well. So we've got the higher highs on price. We've got the price action kind of right near this longer term resistance. And you can see that the negative divergence is starting to play out here. So, one thing to keep in mind, just because the shorter term RSI is kind of getting oversold doesn't mean that the longer term RSI is anywhere near that point yet. So the last time that we had the RSI below 50 was back in October of 2020. And we did bounce pretty well off of that area. So definitely watch for a possible breakdown through 50 on the RSI. Like I said, I really don't use the RSI that much or any other oscillators. I like to use sometimes the MACD just to gauge trend. But this is generally the time I will use the oscillators like the RSI, just because we are starting to turn over, and sometimes it can be very useful to see kind of how much more room could we have to move down. And so the fact that the RSI isn't even below 50 yet, that's something to consider on the weekly chart. So all in all, SPY definitely has had better days. The Qs, same thing. The Qs definitely had a warning sign here. We literally were rejected right at this 1.618 extension, give or take a couple dollars here. But all in all, I mean, if you look at the raindrop chart, that is what really kind of was the warning sign here. So this is something I actually saw after the fact. But some of the other divergent signals on this SPY kind of made me think that we were getting close last week. But this actually happened the second week of July here. So you can see here on the weekly chart, we have a red raindrop that formed on the week of July 5th. Now, if you look at the regular candle here, we actually closed green here. So the fact that we have this green close, but we have a red raindrop, that's kind of a new type of divergence to keep in mind. So, in this case, the fact that we did have the red raindrop green candle, we did hit a new high the next week, but then we had a pretty strong engulfing candle last week. That was definitely that was something to keep in mind, and it was pretty evident with the price action today that we were going to continue down at least for a little bit. Now the question comes, how far does this go? Now, if we were just using the anchored VWAP after this ascending wedge broke down, if we anchor from this point here, the anchored VWAP is down at let's just say 345. So, if we continue down, we have another 9 points or so until we get to this swing low anchored VWAP. The anchored VWAP doesn't mean it's a bottom. It just tells us that that is the average price per share paid since the reversal here in mid-May. So we'll have to see if we actually continue down. The market's already down quite a bit, from 365 all the way down to a low of around 352 today. So will there be any type of breather here just for shorts to cover and then reload? Or, who knows, maybe this is a short-term bottom. We'll have to see. But all in all, definitely something that you should keep an eye on, this anchored VWAP around 345. Now, if we anchor volume by price from this low, we pretty much bounced exactly where you would expect, right at this next volume shelf below. Now, the thing is, if we continue down, we have this huge area below, this volume gap essentially, where there's not a lot of liquidity below. So if we really start to move down, there is a huge volume gap down here, all the way down, as I mentioned, to around 345, which is right in line with the next volume shelf below, from around, let's say, 345 down to around 341.50. So, we've got these areas to keep in mind now the anchored VWAP and the volume by price are right in line here. And it's really just a function of if we hold this this volume shelf here, and if we don't, definitely watch for that area. Now you can see that we've got the anchor VWAP and the volume shelf kind of in conjunction here. If we go to Tesla, this is a really good case study of that type of setup playing out today. So you can see here with the swing low anchored VWAP and the swing high anchored volume by price, we had this literally this exact setup here. So you can see here that we have the break-even demand zone, which is essentially just where a lot of shares are back to break even. There's no more profit to sell, so supply dries up, you get a bounce. And on top of that, you did have the anchored VWAP, which kind of acts in that same type of way from the swing low. So all in all, textbook bounce. We had the exact same bounce literally like 6 or 7 days ago. So, you know, it's kind of crazy to see how perfectly this played out now twice in a row. And this is just a great case study on the anchored VWAP and the volume by price and using them together. Perfect bounce, pretty strong move off that low today. And we'll have to see if we have the same type of move from the previous move where we have a bounce and then pretty much straight back up to this break-even supply zone above. So if we did continue up, this area around 680 would once again be potential resistance. Now, one thing, if anybody has any charts that they want to go over or any questions, just put them in the chat. I'm happy to answer them. And in the meantime, I'll just continue to go through some of these broad market names, and then we'll go over some individual names. So we went over SPY, the Qs. Let's go over IWM real quick. This one has definitely gotten hit pretty hard. And one thing that I'll mention here on the weekly chart, this is definitely the first time that we have closed below this breakout anchored VWAP. So if we do continue down, now I don't see this happening anytime soon, but who knows? I mean, the market is the market. We have to take, you know, what price action gives us. If this continued down, the COVID low anchored VWAP is way down here at 173 to 175. So I definitely don't think we could have that big of a move down. But if you look at the COVID breakdown, we did have a move that quickly before. Now, you know, the COVID crash was a pretty big kind of black swan event. Who knows? Maybe there's another one on the horizon. But all we can do is kind of look and say, okay, this is the first time price action has been below this breakout anchored VWAP from November 2020. And that's definitely something to consider. Maybe the status quo is changing in the market. So we'll have to see if this continues, if we get a retest and a pullback. We already retested the VWAP today. There's still 4 days left in the trading week. We'll just have to see how this plays out. So not the strongest look on IWM. DIA, another one that's pretty interesting here. One thing that I will show is the fact that if you turn on the Ripster clouds on TrendSpider, turn them on here, and I'm just going to use the 2050 EMA. You'll see here that this is pretty common to, or at least since November. You know, this can definitely change as well. But notice how the price action kind of undercuts this moving average cloud over the last 10 months or so, 9 months. We have had these types of undercuts where we do break down, but notice how perfectly the price action has respected this cloud multiple times. So anytime that it does break down through it, you definitely have to take that into consideration. Is this just another repeat of some of these undercuts in a strong move to the upside, or is this definitely a turn in the tide? So here we definitely have more times where the price action has bounced off of it than broke through, but we have now closed below this anchor, or excuse me, this 2050 EMA cloud. This is the 4th time. So we'll have to see what happens from here. If we do anchor a VWAP on DIA from the lows, that anchored VWAP is way down here around 322. And notice that we did actually test that anchored VWAP back in January of 2021 after breaking down through the cloud. So we'll see how this plays out. But all in all, this is a pretty healthy pullback, if anything. Now, it could turn into a bigger move, but for now, the markets did need to breathe a little bit. But at the same time, you can see here that we are kind of stuck, and we've been stuck now for about 2.5 months. So really range bound here. And is this possibly this inverse head and shoulders type of setup here, or is this something more? As I mentioned, you just have to let price action do its thing, and we'll have to see what happens from there. Let's see, just looking at some chats here. All right, thanks for the info, Danny. I appreciate the kind words about the software. As I mentioned, if anyone has any requests to go over, please put them in the chat. But that is DIA. Let's go to some crypto here. Start with Bitcoin. So Bitcoin is one that I'm definitely kind of looking at the bull case and the bear case. That's how you always have to look at it. So if we're looking at the bull case here, what I have is I have the daily chart with the all-time high anchored VWAP from the all-time highs. And you can see we have this descending triangle formation here. So descending triangles, in my experience, definitely don't have a bullish sentiment. They generally are looked at as more of a bearish setup. So that is something to consider on the daily chart. Now, if we did break to the upside, that bull case would be around 42K, which is the anchored VWAP from that all-time high. Now, on the weekly side of things, if we did break down and start a new leg down from the descending triangle, the COVID low anchored VWAP would definitely be the area to watch. So you can see here that that is right around 26,500, give or take. You definitely can't use precise levels on crypto. I mean, even in the stock market, you need to have some type of margin of error. But for Bitcoin, I would say anywhere from 26 to 27 would be an area below for the bear case. And so bull case, 42K, which is the anchored VWAP above. The bear case is that 26 to 27. Let's just call it 26.5. So that is Bitcoin. Let's go into Ethereum. Phoenix, hey, thanks for joining, man. I appreciate the kind words. Kuba's doing great. And then Robert, I'll take a look at Wish. Frank, I'll look at apps. But before that, let's look at Ethereum here. You can see that we are getting to major make or break zone here. I created an alert on this trend line below. It did trigger today, so that's something to keep in mind, that we may be starting to break down. Remember, on TrendSpider, you can create these alerts, and you can see here it says triggered. That means that the alert went off. I got a text message, I got an email saying that the price action has tested this trend line below. Now, sure, that's something to consider, but the weekly is what I'm more kind of looking at here. And notice here on the weekly, we are breaking down through this trend line that we've been looking at now for quite a while. So if we look at the weekly chart, this is kind of that area that I was talking about. So we anchored a VWAP from this candle here. That was kind of your ascending triangle breakout back in November of 2020. And you can see here that we are literally trading right at this VWAP, but we are breaking down through this longer term trend line. So, I would definitely say the VWAP is more powerful than a trend line, but that VWAP really needs to hold, or this thing could really start moving down very quickly. And if that's the case, that's where you'd anchor another VWAP from the COVID low, and that's way down here around 1,300. So keep that in mind. If we break down through the ascending triangle breakout, anchored VWAP, then the next area to watch would be around 1,300 below. Let's see, nothing on the chat. And so remember, all of this is an if-then statement. You have to have a bull case, you have to have a bear case. If a specific resistance breaks out or support breaks down, then you have to look at your level above or your level below. That's all it is. You can't sit here and try to predict the markets. You have to have both views, both perspectives, and you have to say, okay, well, if this happens, then I have to do this. And that's really how you can get some type of process going in the market. Hold on. Danny. Yeah, gotta fire crypto. I don't know if any crypto is going to be good right now, Danny. I'm not too bullish on any crypto, but we'll have to see. But all in all, that's Bitcoin and Ethereum. Let's look at some individual names here. We already went over Tesla. That's one to definitely keep in mind. Fubo is another interesting one. So Fubo, a couple things here. We did bounce at this swing low anchored VWAP today from the weekly chart, but the thing is we still have quite a bit of time before this weekly candle closes. But the fact that we did bounce and we did put in a very slight lower low here, we'll just have to see if this is actually a bounce or just a dead cat bounce. Now on the daily, this is when things get interesting. So if I anchor volume by price from the swing low, which is just this point here on May 11th, you can see here that we bounced exactly where you would expect, right at this next volume shelf below. Excuse me. And we moved pretty quickly down through this volume gap. You can see that we bounced 2 times here over the last 3 days. So we'll have to see if this actually is something worth looking at, or we're just going to go right back down to the shelf. Now, if we turn on the raindrop, you'll notice something interesting. We have a green raindrop, but we have a red close. So remember what we just talked about on the Qs. We had a green close on the candle, but we had a red raindrop. So this is kind of the opposite of that, where you had a red close, but you had a green raindrop. And so that's something to definitely keep in mind. There is a little divergence there. So if we did move up, we have pretty heavy supply right around 2750. That was the area that we tested on Friday. We got rejected pretty hard there. So we'll have to see if we can clear that 2750. If that's the case, just anchor a VWAP from the swing high. Your next area would be around $29.75 to $30. On Ethereum, why did you pick that first anchor point? AJ, that was the breakout point for the ascending triangle. So when you're anchoring from different points, you want to anchor from kind of status quo changes in the market. So in this case, we anchored from, let me turn this to a regular candle. We anchored from this point here because this is when we kind of broke out of that ascending triangle. So this is your breakout candle. You can see how well that the price did respect it quite a few times. A couple weeks after that, we almost bounced off of it perfectly in May, bounced off of it again here in June, and then we're back to it now in July. So it's been a pretty strong point of level of interest below, and that has been where we've bounced, but we'll have to see if that's the case going forward. The anchored VWAP from the COVID low is just that was our big reset in the market, so that's why we're anchoring another one from the low. So hopefully that helped AJ with understanding why I anchored it from that November 2020 breakout point. All right, so the next one that I want to go over here is GME, GameStop. This is one that I recently got in a position last Friday. Why? Well, there's a couple reasons. So let's go to split chart here. So you'll see here, one, we've got this really nice falling wedge here on the daily chart. So you can see here that we're getting very close to the apex, and some of the main things that I'm looking at, and this is another thing, this is another case study on me using these oscillators at specific times. So, excuse me. So we've got the MACD, and we've got the RSI, and then I'm actually going to add the Williams percent range as well. And kind of the same thing that we're looking at on the upside for SPY, the Qs, that type of divergence, you can see here that we actually had the opposite of that here. So you can see a couple things. Let me make this a single screen. get rid of the RSI, the MACD. So this is what I was seeing on Friday, right? We've got lower lows. So here's a low, and that low coincides with this low here. And then you've got another low here, and that coincides with this higher low on the Williams percent range. So you've got these lower lows on price, these higher lows on the Williams percent range. That's the first thing that kind of piques my interest. The next one is the MACD. So you can see here the MACD is really starting to curl here. Now, it doesn't have to cross. I mean, we just have to take price action the way, you know, it plays out. But the fact that we are really starting to, the MACD is kind of moving pretty stable. It's not like a big drop and curling back up. It's just kind of this slow and steady drop. And you can see here, the histogram is moving up. So the MACD histogram is just the difference between the MACD fast, this blue line, and then the MACD slow, the signal, which is the yellow line. So as the blue line gets closer to the yellow line, that difference is the histogram. So these red lines are literally just the difference between these two lines. And so you can see that they're getting higher, these higher lows. I look at that as kind of divergence as well. So that's the reason I got in. I think I'm down a little bit on it right now, but if we do get that breakout, the level that I would be watching here would be right around I mean, you have supply even all the way around 200. So 200 all the way to around 215. I know that's a very wide range, but GameStop and some of these other meme names are just some that have such a range. It's really hard to even be within 5% sometimes. So if I were just to use the main kind of things that I look at, you'll see here that the main supply zone would start around 206 all the way to around 217. So that would be the area I'm watching. If for some reason we do continue up from there, 231 would be definitely the anchored VWAP to watch as well. So pretty much from 215 to 230 is what I would be watching. So before we get anywhere near that, we have to break out of this falling wedge, and if that's the case, then that's when we can start looking a little harder at some of these upside levels. Let's see. So we can start looking at some individual names that you guys mentioned. So NEE is the first one. Next Era Energy, I'm not familiar with this one. Not a bad chart though. So the main thing that sometimes I like to do on TrendSpider, just to get an idea of the overall trend, I like to turn on the auto trends. So you can see here this trends button right next to indicators. If I click it, these trend lines will pop up. Now, a couple things. These trend lines were drawn back in May of 2020. So I need to update this and draw the more relevant lines. And then I can go in and I can change up, you know, the essentially the settings of the auto trends. So maybe I want to look for, you know, some of these broader formations. I just am going to use original, which is the analysis type here. Enhanced is going to look kind of at price action closer to the most recent price. And so, no, this would probably be the setup I'm looking at just based on the way I look at the chart. So I'm highlighting these two lines, turning off trends, and now we kind of have a better setup to look at. So we've kind of got this area where we've tested this support line multiple times. So really not too much going on over the last these weekly bars. So over the last 6 weeks or so, you kind of slowly grind it up. Now, I use the auto trends, but I can also go in, I can draw my own line. So I would draw another line from here to here. We definitely didn't just recently break out. Last week, you can see that we're pulling back a little bit now. But that's pretty common. I mean, this could even pull back and retest this previous resistance here and continue up from there. We'll just have to see what happens. But that is the weekly view. Yeah, we will have channels, Danny, at some point in the near future. But for now, the auto trends will kind of sometimes create these automated channels already for you. On the daily chart, not too much. This is kind of a very wicky stock. You've got a lot of wicks on the upside here. So you do kind of have an outside bar. Let's see if that actually counts as an outside bar here. So if you are trying to, learn new candlestick patterns, or maybe you're watching some other traders on FinTwit, and you see the Strat, for example, talking about outside bars, that type of thing. We do have candlestick pattern recognition. So sometimes if you have a very close candlestick pattern like this, where I can't really with my naked eye kind of see, is this actually an outside bar? All I need to do is go to patterns here, type in outside, and outside bar will pop up, and then any outside bars on the chart will show up on the chart. So if you want to train your eye a little bit around these types of patterns to recognize them quicker, this is a great tool to use for sure on the platform. Now, you're welcome, Danny. Thank you for the request. Let's look at apps. I haven't looked at apps in a while. Ooh, this thing's definitely gotten hit. Apps. So last time I guess I looked at this, I was drawing possibly an inverse head and shoulder. Here's the possible shoulder. I think that would be safe to say it's invalidated at this point, more or less almost trying to be a double bottom. So let's just kind of turn off the chart and kind of see what the auto trends are showing here. Not too much. Let's see if there's anything here. Okay, well, let's lock in this. Turn off trends. So yeah, I mean, you've got a very rough kind of symmetrical triangle possibly forming here. If this did continue down, that trend line below would be right around, let's say, 52 to 53. Now, this has been both resistance and support. So you can see here, this is our original starting point. You can see this originally was resistance shown by the red circle. And then you can see as it broke out and pulled back, this actually became support. So this is a pretty strong trend line because it has acted as both resistance and support. So if we did break down, that 52 to 53 area, maybe a little lower below, would be a target. Now, remember, the thing about this is you can go and create alerts around these lines. Who says that if it does break down, it actually gets all the way down to that line? These are always just zones rather than exact precise levels. So this is where the sensitivity comes in. So you can go in, create this zone rather than just an exact line, and you're really able to be alerted anytime the price gets around this area shown in this purple highlighted area. So that is definitely something to keep in mind on apps. We'll have to see after 3 really strong weeks to the downside if this finally catches a bid. But all in all, on the daily, you do have a really nice outside bar here. And let's see what's happened the last time we've had some outside bars. So we had an outside bar on July 9th. For 2 days, we moved up from a close of 64 all the way up to around 67. So generally, on these bullish outside bars, you do get at least a little bit of a move up, but you can see not always. So this is sometimes where I'd pull an oscillator out like the MACD. MACD's curling a little bit. What does the RSI look like? RSI is getting a little oversold. Percent range, is there any divergence? Yes, there is. So like I said, I don't really use oscillators, but this is when I use them. So this would be a really interesting thing to look at on apps. You've got a lower low, and then you have a higher low on the 2-week Williams percent range. So honestly, apps does not look too bad here. You can't take that as advice or anything. Obviously, I'm just going over the chart, but to me personally, this would look like possibly, a chart that I would take a trade on. Why? Well, you've got the falling wedge here that's kind of forming pretty nicely. You actually kind of have a falling wedge breakout right here. So that's definitely something to keep in mind. But you also have that divergence as well with this higher low right here. So who asked about apps here? Nice, Frank. Yeah, I mean, apps is looking pretty strong now. If it did continue up, a target above would be this anchored VWAP, probably around 67.50 to 68. So definitely keep apps on your watch list or your radar going into the rest of the week. Nice find, Frank. Frank, an outside bar is when the high and the low of a candle is greater than the previous candle. So just to quickly answer Frank's question here, notice here on this bar, the high and the low kind of engulf this previous this range here. So Frank, hopefully that helps you. You can see here if I turn off the patterns, the high and the low of today's candle is bigger than yesterday's candle. So it's kind of an outside bar because it's outside of both the high and the low of the previous candle. All right, so that was apps. Looks pretty good to me. Wish. Oh, Wish. This has been quite an interesting one to see play out over the last couple days. I was not thinking the price would respect this falling wedge as much as it has, but it definitely has. So all in all, you can see we've got this falling wedge here on Wish. Frank, an engulfing is just engulfing the previous candle's body. So there is a difference between an outside bar and an engulfing candle. A bullish engulfing candle is just the body of that candle is engulfing the previous day's body. An outside bar is engulfing pretty much the 2 wicks of the previous body. So that's kind of the way to look at the difference between an engulfing. Engulfing is more a function of the actual body of the candle, and outside bar is more of a function of the wicks on the upside and the downside. Wish. Okay, we're on Wish. Daily chart, falling wedge. I had a target of around 860 to 870. I think we bottomed out here right around 890 today. I think we're probably pretty close for at least some type of relief bounce here. So if we anchor a VWAP from this swing high, you'll see here that the anchored VWAP is right around 12 bucks. So if this thing can finally catch a bid, it could move up to this 1210 area above. So keep an eye on this this falling wedge formation. If we do break out, that's definitely more bullish than bearish. So we'll have to see how this plays out. So that is Wish. And let's look at the weekly real quick. So we were talking about Wish last week, talking about this previous resistance here. Could be just acting as support. We did undercut it last week. We undercut it again today. It's kind of acting as a line of best fit at this point. But, depending on how much margin of error you have around your trend lines, this still could kind of be just a simple retest of the previous resistance. So we'll have to see how that one plays out. Be Big. This is another one that had quite a crazy last couple days here. So the daily here on Be Big, look at this. I mean, what a crazy stock. So the anchored VWAP from the swing high has kind of been my target since I originally, I think, put this target not last weekend, but the previous weekend, you'll see here that the price is definitely respecting the anchored VWAP above from this June 9th high. Now, if we draw a simple trend line here, let's say from here to here, technically we broke down below this trend line and opened below it. We closed right at it. But, some of these names like BBig, sometimes technical analysis is a little tough because they're just so volatile and like just the liquidity is just crazy. Not in a good way. It's not the most liquid stock sometimes. And the spreads, I'm pretty sure, are pretty big. Now, on BBig, the one thing that did have my attention was the monthly raindrop. So we talked about this last week. A lot of that volume was above resistance. You can see quite a bit of volume profile up here. This month, we're a little over halfway through it. You can see there's a decent amount of volume even at the top of the monthly range for July. But we'll just have to see how it plays out. Like I said, this one has been it's been responsive to your supply and demand zones, your anchored VWAPs, your volume by price. But yeah, this is definitely not the easiest one to kind of see play out. You've got news in the picture. Anytime you've got a stock that has a lot of news events and these crazy kind of gyrations intraday, technical analysis can be a little tougher. So you may not always have as much of an edge as something else that does kind of play by the chart, if you will. So that is BBig. Let's see here. What was the next one? GSM. What is GSM? I'm not familiar with this one. Well, looks like every other chart in the market, so that's a start. So GSM, you have pretty much, let's see where the trends are kind of shown here. So here's one on GSM. I'm not sure, see what original looks like here. Yes, I guess I'd probably use like this area possibly as support, or this area, turn off trends. So on the daily chart, I mean, if we're just looking at this trend line below, the trend line is right around 426. Now, if you anchor VWAP from this point, we did miss this anchored VWAP by about 20 cents or so. Now, one thing to keep in mind, let's see what the volume looked like. Kind of average volume. I don't know. Just anytime you've got a trend line below and an anchored VWAP below, when you're this far away, it probably could test it below. We'll just have to see. I mean, you did have a pretty decent hollow candle today. That means that we closed below the Friday's close, but we closed higher than we opened for the day. So for this one thing to also keep in mind is you did have a green raindrop with a red close. So that would be on the bull side something to consider going into the next couple of days. Now let's look at the RSI. Pretty oversold. It hasn't been this oversold in quite a while. Yeah, the last time the RSI got this low, we did have a pretty strong move to the upside after that. So keep that in mind, but also keep in mind the RSI is something that a lot of the time can give you some false signals. That's why I like to use the percent range and the MACD with it. But all in all, kind of right in the middle, I would say 420 to 425 would be a low if we did continue down from here. GSM Silicon Play imports. Okay. Look at the monthly chart on GSM. Yeah, I mean, it's definitely gone up. I just don't like this strong monthly candle that's forming here. So especially after 1, 2, 3, 4, 5, 6, 7, 8 green months in a row. So we'll have to see how it plays out. So that is GSM. Next one, NNDM. That's one a lot of people have been asking about lately. Not the best monthly chart for sure. Let's look at the daily chart. Oh, okay, I've already done a chart on this. So what did I have here? Okay, so I think I did this chart last week. So we've got the longer term level here broken down through last week. So that's definitely something to consider. The uptrend is invalidated here. And then the area highlighted in orange is simply just this previous high that we had back in 2020. We tested that high and a little more back in October 2020. And then we finally broke through it in November. And you can see here when we pulled back, this acted as support back in May. And so that would naturally be an area below for NNDM if we did, have a technical level below to watch. It would be right around 550. I'd say 5 to 550 would be your low. Now that's a huge, that's a 10% kind of give or take there, but you have to remember these are very volatile and you can have some times where the market's just not that liquid, and that's what creates these big these big wicks in price. So keep that in mind. It doesn't have to get all the way down to 550 or 5, but if we were going to look at what happened last time, that would be the zone to keep an eye on for NNDM. Let's see here. NOK. Nokia. Yeah, Nokia. I mean, it's it's definitely still holding the trend line. So if we're looking at, let's say, this trend line from here to here, definitely still holding it. Almost filled the gap below from the gap up on July 13th. A little bit of a hammer type look, but I wouldn't call that a technical hammer. So all in all, we'll have to see what happens with this one. Meme names did hold pretty well. So GME we already went over. AMC is another one that actually doesn't look too bad here, at least for a short-term bounce. Now, if you were to look at the anchored volume by price, you're still kind of in this crazy kind of very low volume zone. So the anchored VWAP below is right around 23 to 24 from the January 5th low. And then if you broke that, a lot of your volume is really holding down here in the $13 to $15 area. So keep that in mind. Keep in mind too that if you draw a simple trend line from this point here, this pretty much lines up almost perfectly with this anchored VWAP below, right around 23. But that's for now. So if we went straight down tomorrow, 23 would be your area to watch below. Now, if it maybe took a couple more days, maybe if we did something like this, then your support below would be closer to 29. So remember, these trend lines especially, they're ascending, they're increasing with time. So the longer it takes to move down, the higher your trend line support will be, because it's a function of time. So as time goes by, those levels increase. So that's pretty much an ascending, that's what ascending trend line is. So right now, though, if this did have a big move down, you do have some confluence, right, with that COVID low anchored VWAP and this support trend line below. So that is AMC, just another meme stock that I wanted to quickly go over. WTER, I think I've the alkaline water company. What's the market cap on this? The reason I ask is just because too small of a market cap and technicals really go out the window. 142 million. No, okay, so it's over 100 million. Yeah, I mean, this one looks decent. Let's see the weekly chart. Kind of a very volatile stock. One thing I would do is turn on the daily anchor the volume by price from this low here. And yeah, ooh, nice. Got a pretty decent volume shelf here. So you can see here, I'm just measuring the volume by price from this April 16th low. You can see here that we do have the shelf forming. Now the price is kind of within the shelf now, so this kind of is acting as a little bit of supply. But if the price closes above it, that's when it can kind of act as a volume shelf with a little bit of a launch pad type of feel, where this creates a base for the price to move up higher. So WTER actually not too bad of a look here on the daily. It just would need to get through that top supply zone right around 160 or so. So that is WTER. Shopify would be one we could look at. I don't really look at this one too much. Looks decent actually. Yeah, Shopify, a pretty strong day here considering the overall market. But same thing, you've got the volume shelf, but initially this is going to act as supply. So, there are a lot of shares pretty much holding right in this area. We would need to get above, let's say, 1,500 to make this more or less kind of a break-even demand zone. Right now, we're trying to get through some of those shares that are holding at a higher price. And naturally, you're going to get some people to sell because, they're like, I just dealt with a little bit of a drawdown. I want to get out as soon as I get back to break even. And that's kind of the psychology of these shelves. So Shopify on the daily, decent candle. You've got another outside bar here. So, for those that were wondering what an outside bar is, once again, your high and your low are both higher and lower than the previous day's wick on the upside and the downside. So generally, I would look at this more as a bullish setup than a bearish, but let's see if we can get through that supply zone above first. So that is Shopify. Got 5 more minutes or so. Do I think the breaker will trip this week? I do not think so, but who knows? It could. So let's see. Quite a few comments today. Thanks everybody for joining. Body. I'm not sure what Body is, honestly. Beach Body Company. Definitely not familiar with this one, but a very strong candle today. So that's definitely something to consider. If you anchor the volume by price from the high here, you'll see that once again you have quite a bit of supply to get through, let's say around $9. So if you can get above 9, that's when things get interesting. Anchor VWAP from the high, and your level above would be around $10 to test to the upside. So that is Body. Let's look and see. United Airlines. There's earnings tomorrow, so it's not gonna. Oh wow, this thing got destroyed. Let's see what the COVID low anchored VWAP is. The COVID low anchored VWAP for the for UAL is way down here at 37. So, earnings, I guess you mentioned earnings are before earnings tomorrow. I'm assuming earnings are probably after hours. Not sure. I mean, this thing has literally gone from 60 all the way to low 42.65 today. If there's earnings coming with that big of a move to the downside, earnings have to be pretty bad to continue down. Even if this is bad earnings, a lot of that's probably been priced in with this big of a move to the downside, especially considering our high back in March was at 63.50, and now we're trading at 43.50. So, if you look in the weekly, I think this has had this will be the 1, 2, 3, 4, 5, 6, 7. This would be the 8th red week in a row. Generally, you don't get that many red weeks in a row without some type of bounce. Even during COVID, you had 1, 2, 3, 4, 5 red weeks in a row. Then you got that big move up on the 6th week. So if I were to guess, I would guess that this is probably trying to near a low. We'll just have to see how much the Delta variant news kind of plays into this. CLSK. I've had a lot of people asking about this one. CLSK. I'm not sure what this is. Clean spark. Well, the weekly candle doesn't look great. Let's go in the daily first. I mean, if you anchor the VWAP from this low here on March 2020, we are literally trading right at this anchored VWAP. So definitely something to consider. One that I did want to go over, more of a trade idea. And remember, these trade ideas that I mentioned, these are just ideas for you to look at this perspective. And then if you decide you want to look into it more, you have to do your due diligence and all of that good stuff. But UPST is one that I did enter today. I entered at a 114.41, and I'll show you guys why. So we've got the anchored VWAP from the IPO here back in from December of 2020. You'll see here that we had a really nice bounce off that anchored VWAP. I decided to buy on strength rather than try to buy at the low today near this anchored VWAP because you really don't know if that's the low. But the fact that strength came in, this is one that I look to hopefully trade maybe up to around the swing high anchored VWAP around 128 to 130. So UPST, definitely keep this one on your radar. If we anchor the volume by price from the IPO as well, you'll see that that volume shelf is initially going to act as supply, and that is a little below the anchored VWAP. So really look for this starting to hit some pretty heavy supply right around 120. And if it gets through that 120 to 127, that anchored VWAP is literally right around 129.50. So definitely check out UPST. It had relative strength today, and it's a pretty good looking setup here with this anchored VWAP pinch. The anchored VWAP pinch is when the anchored VWAPs are starting to kind of converge, and you can see the price action is trading within it. So UPST, I really like it. One last thing here that I'll mention. The reason why I also like it, I like to look at candle, how many times the candle has been red. The weekly candle has been red 1, 2, 3, 4, 5, 6 red weeks in a row. This needs at least some type of short-term bounce just because of, it's been beaten down quite a bit. So that is all the time I have for today. Thank you, everybody, for joining. Really appreciate all the engagement and the interaction on the chats. As I mentioned, two that I like, two that I entered today or Friday, I entered GameStop. I think I'm in right around 175 or so dollar cost average. UPST, I got in around 114. That doesn't mean go mimic my trade. I'm just telling you guys what I like into next week, kind of looking at the charts. And after all we went over, those are some of the ones that I really like. But there were also a couple that looked good. Apps was one that looked really good. I'll keep that one on my watch list. And all in all, we'll just have to see how the market plays out. Everybody have a good trading week, and I'll hand it back off to Spencer.